Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, great to talk with you. It seems like we live in a different world since we last spoke about 2 weeks ago. It's quite amazing. I mean, the virus has broken out in the United States and Canada. Most people are in some sort of lockdown or shutdown of some sorts, but we've seen a lot happen in the financial markets. The Federal Reserve has taken interest rates to zero, and Monday announced that they're going to do unlimited bond buying. So quite amazing times that we live in.
What kind of an effect is unlimited bond buying going to have, or can we predict that?
Well, I believe, and was writing this to some people, that when the market was dropping this month, that there was actually a systemic risk in the financial markets that was showing up in some exchange-traded funds, bond funds in particular, in which the net asset value wasn't matching the price that the funds were trading at. And what was happening was there was there still is when I say this, but a lack of liquidity in the markets, and the bond market essentially topped out in February. Corporate bond yields made a record low. The Treasury bond market topped out. TLT made a high. That's a exchange-traded fund for the 20-year Treasury bond. And this was causing some of these bond funds to malfunction. So I think the Fed, in part, took action on that. But last week there's also a few mortgage funds that were on the brink of failure. So all the stress in the system was creating a lot of problems, and I think the Federal Reserve has reacted to that to prevent what could have been a complete collapse in popular exchange-traded funds. There's another way to make this even simpler to understand. Look, the economy is shrinking. There have been dire projections by various economists. Goldman Sachs said that the first quarter the economy could shrink by 6%, 24% in the second quarter in the United States. And one of the Federal Reserve officials, Bullard, said it could be shrinking over 30%. These are levels not seen since the Great Depression. And I think one of the things that's been happening in the markets has been people have been selling to position themselves ahead of economic hardships, to raise cash, to make sure that they can pay their bills, or to reduce their debts, and so forth. And we're basically seeing a massive selling of just about everything in the financial markets the past couple of weeks. The only thing that really went up until this week is the U.S. dollar index. Even gold and silver were declining, but now this week, starting on Monday, gold has come alive. Silver also has gone up, and they did that on a day in which the stock market was down heavily. So I think that's a good sign that gold and silver have escaped further selling in this mass liquidation process, and are going to now act as safe havens going forward. So the big picture, I guess, is even though the stock market is rallying today pretty nicely following a rally yesterday, I still think we're in a big bear market for the U.S. stock market. A big recession is starting to play out, and we have, these kind of pressures that are going to impact the financial markets over the next couple months. But gold, I think, silver are now going to benefit from this and act as safe havens, in particular when the bond market, I don't think, makes much sense anymore from an investment standpoint for a person to put money into, because you can't make any interest. I mean, the 10-year Treasury bond, as we're speaking, is yielding 0.9%, and these junk bonds don't yield much either, and you have companies that are in danger of going bankrupt or losing revenue streams. So with that, all those problems, gold and silver, I think, are important for people to own. Gold is now trading less volatile than the stock market. It falls less than the market when the market falls, and goes up more when the stock market goes up. So even though the Dow has had nice day today, nice day yesterday, gold is up more. And I think that's what is the most important thing people now actually need to focus on going forward. I know in the past I've said gold is going to become a necessary investment. Well, that time is now here.
We'll have more with Mike Swanson right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Mike Swanson. Silver still hasn't picked up the way gold did. Do we expect silver to come alive anytime soon?
Yeah, I think it will. I would lump silver in with copper and other commodities, including even food and agriculture, for that matter. I think what has happened is that, and still is, because of the economic weakness and the need for people to sell many things, there are actually deflationary pressures in the U.S. economy. I don't think they're going to last, but for so long, but they are there. And this caused silver to really dump, substantially since it peaked in February around $19. Silver went all the way down to $12. So it's bouncing nice. It hasn't recovered as quickly as gold has. But I think in time, silver will join gold and go up, just as much as gold is. But I also think other commodities will too. And what I think is gonna be a big factor in time is inflation. So right now, the Fed has zero rates. They're doing all these quantitative easing operations. I mean, it amounts to over $2 trillion, just their bond buying. The U.S. government is going to have a completely busted budget now. It's probably over $2 trillion budget deficit. They're sending, it looks like $1,600 to most Americans, in the first month of help programs, that will continue at least to the end of the year. They're bailing out corporations. All this spending isn't causing inflation right now because the deflationary pressures are so strong. An economy contracting 30% in the first half of the year, it's an incredible contraction. During the Great Depression, the U.S. economy shrunk 40% over 3 years, and we're looking at a potential 30% shrinkage in 6 months. I mean, that's Great Depression figures. Unemployment is probably over 20% now. I mean, it's just absolutely incredible. So once these pressures of economic depression kind of slow down or end, I think we're going to see inflation in the United States just completely pick up, and that will benefit silver. It'll benefit other commodities, agriculture commodities. Energy will eventually benefit, but energy will probably be the last thing to really start to go up. The problem with all of this stuff I'm saying, I'm pretty convinced it's going to happen, but I can't predict the moment that this begins. It could start in 3 months or 6 months, but gold is certainly the thing that's is going up first. And I think, the prudent thing to do is just for people to buy some gold, average into it, but also have the expectation that silver and these other commodity type investments, they will also in time, go up dramatically. And the stock market, to me, in comparison to these other things, is just still, even with the rally today, yesterday, is pretty much dead money, going forward. I think gold is outperforming the stock market. It's going to continue to, and in time, all these other commodities will also. And as far as buying stocks, those are the things to buy. Stocks that, are going to benefit from inflation, that are linked to commodities, instead of, the past fads, the Teslas and the Nvidias, and these kind of things, that were so popular in the past. We're really, at the moment, we're all living through this virus situation, the shutdowns, and, I think, look, the federal government, I saw a planning document that was released to the federal bureaucracy in the United States, created by the coronavirus commission that Pence leads, and it was projecting that this crisis is going to last 18 months. That doesn't mean the country's going to be shut down for 18 months, but this is not going to end in 2 weeks. There's people I've talked to that think that. They watch TV shows where people talk about miracle cures, and none of this is real. And the government itself is planning for 18 months. The U.S. military is quarantined on bases. The military personnel are not allowed to even travel from one base to another. This is done to protect the armed forces from being infected by the virus, but also to have them as a contingency in case they're needed down the road for civil disorder or other things. And that's how serious this situation could end up becoming. So I think we all have to be cognizant of that and not listen to people who say this is going to end in 2 weeks, because it's not. And the market is the same way. I mean, the market can bounce for today, tomorrow, maybe it holds up for a couple of weeks, but things are not going back to normal. And when this whole crisis is complete and played out, I think, the virus thing, 18 months, it's when they think it'll be a vaccine will be developed. But this economy of deflationary bust and then some sort of inflation boomerang, that whole cycle could take 2 or 3 years to play out before we're living in a more normal economic situation. So these are the type of things I'm trying to prepare myself for. And as investing is one thing, and we'll talk about, on your, we talk about that together whenever you let me get on your show. And, luckily the House Street website and the other guests you have are, great resources to do it, because they're very interested in commodities and natural resources.
We'll have more with Mike Swanson right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF.
surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, gold miners, are they going to really pick up if gold has become the shiniest object out there, no pun intended?
Yeah, I think they will. They've acted in a funny way. Some funny things have happened to them. The GDX ETF, which is for gold stocks, it sort of had a malfunction 2 weeks ago. It diverged away from its net asset value, and there's like a giant liquidation in that ETF that caused a lot of the big cap mining stocks to fall dramatically Friday last week, and now they've all bounced back up. They're just Newmont is about 10% off its high set just a few weeks ago, which is good. So I think these are good stocks to own. The only, I guess, drawback from them or potential problem is a lot of them are curtailing their operations because of the coronavirus. Some of them are even shutting down some of their mines. But that's not, that's probably just a short-term problem. And, as far as individual stocks, I think they're a great places to put some money to work. And, the small cap mining stocks, they also got hit in March, but they've been bouncing back the past week. So I think that's a sector too that will do fine over the next couple of years. And probably we've seen the bottom put in most small caps and the big cap miners also. So I think that sector is not like 2008 where they're just going to melt down. I think they had their kind of plunge with the market, and the bounce back in gold tells us that that's probably over with.
Now, taking a look at oil, we have the price war going on between Saudi Arabia and Russia. How's that going to affect North American oil producers?
Well, it looks like it's really putting some pressure on a lot of them. There's going to be a lot of fracking companies that they just are not profitable when oil's trading under $30 a barrel. So probably some of them are going to go out of business. I don't expect the price of oil to snap back as quickly as gold has, or that I think silver and other commodities will. It may take a year for oil to really, get back up to where it was, to get back above $40, let's say. So unfortunately, for energy stocks, they're going to take some time to have to bottom out and base out and so forth, but they're not something I think we should ignore. I do think they will end up being good investments. And there are some of the larger energy companies that have strong balance sheets and can weather oil being so low. Exxon, for example, does have a lot of cash and even raised some more money, even with this decline in the bond market, even though they don't need it. So there's investment opportunities out there, but it's going to take some patience. And I do want to be a part of the sector. I actually tried to buy energy stocks in January and I got stopped out of them as, everything unraveled in the market. So there are something I want to personally, put money back into myself.
So, overall, Mike, what's your belief on what's going on and what do you think's going to happen?
Well, bottom line is, I think we're in a big recession. I don't think it's going to end this quarter. I don't think the virus shutdown's going to end this month either. And the stock market, I think, is in a bear market. When something is a bear market, you use rallies to get out, and they could last for quite some time. Could last a year. But in this environment where the Fed is pledging to do unlimited quantitative easing, and the government's doing all these spending of money like we've never seen before. It's going to bust the deficit. It's going to eventually threaten the U.S. dollar hegemony. So gold is the number one simplest thing anyone should get involved in. Just buy gold. Silver will do well too. And for stocks, look at the mining stocks. I think that's the simplest investment path going forward. But the world has changed in the past 2 weeks. We don't live in the same world we were living in, and I don't think we ever will again. And when the box has been broken, you got to think outside the box, and most Americans aren't doing that. And so they need to get into gold. That's the simplest thing they need to do.
With so many employees told to go home and work from there, do you think companies will find out, we don't need these massive office blocks anymore? We can be just as efficient working remotely, and we don't have to pay all this overhead?
Yeah, I think some companies will. I actually, on Monday, I bought TurboTax to do my taxes, the program, and I had to call customer support, to activate it. And I got this woman, and she told me she was working out of her house. Made me wonder, is that going to be something that company does forever? And I assume a lot of companies will, because it's probably cheaper to, even when this is all over with, to have people just work at home than have an office and all the expenses with that, or just have a small office where you do face-to-face human resource stuff and hiring people and talking with them. But, some companies and operations won't need these giant office buildings. I mean, where I live, there had been a giant office building for customer phone support. That companies like that may disappear. And there's probably all kinds of examples we can think of for that sort of thing. So, companies that make changes and are able to survive will probably make those changes permanent.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.